How's it going, everybody? It's Stas here. So we had one heck of a day in the markets today. The S&P went up 1.1%, the Dow went up 1.3%, NASDAQ 100 up 0.7%, and get this, the Russell went up over 2%. So today we're going to break down some charts, my thoughts on the markets, stocks I'm looking at right now. So sit back, relax, take a sip of that good old Monster, go down below, check out my Patreon if you guys want all my real-time buys, sells, call outs, and a bunch of exclusive content. And also check out the free links. You can get $50 from M1 Finance, 2 stocks from Webull, up to $1,600. All of those are linked down below. And with that being said, let's get right into the video. So as you guys can see, SPY, which tracks the S&P 500, you guys should know that by now, hit another brand new, fresh all-time high at $435.84. And it's very clear here on the 5-day, 5-minute, we ended up breaking out of the high point from yesterday, being at about $432. And we obviously, since we hit another all-time high, we broke out of the previous all-time high resistance, which was right around 434.50 to about 434.75 here. So it's clearly obvious and evident that the bulls are in charge. There's no doubt about that, especially because we broke that high from yesterday, which, if you guys remember, I was talking about this in the morning video today, which go check it out. And that's typically a video I do every single day exclusively for my Patreon members, my top tier patron members. And I uploaded it today on YouTube so you guys can get a bit of a taste of what I do every day on Patreon. So go check it out, the video from earlier today. We mentioned how that we were breaking out of that point this morning at 432, which was the low point from Wednesday. And the fact that we failed at the low point from Wednesday yesterday on Thursday and we closed on a downswing, that wasn't great for the bulls. But this morning, again, like I mentioned in the video earlier today, this morning's video, we gapped out of 432 and we filled the gap pretty much all the way to the previous all-time high at 434.50, 75 roughly, and of course we broke out of there, thus hitting a brand new all-time high at $435.84. So overall, needless to say, guys, the bulls are 100% in charge when it comes to the overall markets. I mean, you can see that on the 20-day chart. You can see it on the 4-hour chart. The uptrend is continuing, no doubt about it. And I'm not trying to say that we're going to explode through the roof here, but this could very well be a breakout, a buy the breakout opportunity, meaning now that we're taking out 434, 435, which has been a sticking point the past couple of days, all of July pretty much, this could end up going a bit higher before it ends up pulling back again. And quite frankly, it's not that overbought when it comes to the RSI here on the 4-hour chart. Sure, it is at a 63 RSI, so it's closer to overbought status, but it's not like it's at 75 or 80, which would be ridiculously overbought. So I feel like there could be more juice in this rally, maybe to about 437, 438, maybe even 440 before we end up maybe seeing a pullback from there. So yeah, watch out for that, guys, and we'll see on Sunday night what the futures are looking like. And of course, every Sunday I do make a video going over my game plan for the upcoming week, talking about the markets and so forth. So make sure to subscribe so you guys don't miss out on that. And when it comes to QQQ, this one is about to break out. We didn't hit an all-time high today like SPY, but we did end up holding the 50 moving average on the 4-hour chart. We're rallying off of it. We can see on the 5-day, 5-minute, we broke out of the high point from yesterday. We clearly took out 360, which was the low point from Wednesday. So these are great signs that momentum is in the bulls' favor here. Now we just need to break above 362, and from there, we're probably going to hit another all-time high, which the all-time high now is 362.76. And like SPY, guys, no joke, I know it sounds crazy, but if we break 362.76 here, that all-time high, this could be a buy the breakout opportunity. Maybe it rallies up to the higher 360s, mid 360s before seeing a pullback from there. That's kind of what I'm seeing right now. That, by the looks of it, that is what's setting up. So we're going to watch those levels on SPY and on QQQ. And as always, I'd love to know your thoughts. Drop me a comment down below. Make sure you guys smash that like button if you are enjoying the video thus far. And now let's talk about some stocks. I have about, 7 stocks here on the list. Number one is DraftKings, which I've mentioned many times on my channel, and of course you guys on Patreon know this. DraftKings is my biggest swing position. This is one that I'm in at about $52 roughly, and we got some good news today from DraftKings when it comes down to their relationship with the MLB, and you guys can see the big pop that came after we got that news. DraftKings ended up going from $48.60 to about $50.40, so it rallied about 3-4%. And then it ended up cooling off for the rest of the day, but it still ended up holding an uptrend for the rest of the day. And all day today, DraftKings was uptrending and went up about 80 cents, up 1.7% on the day. And this ended up popping after the MLB relationship expanded to include free live games on the DraftKings app. And as a part of the expanded relationships, the rights to bet and watch feature, there's rights to the bet and watch feature in which those with open and active MLB.com and DraftKings accounts will be able to watch live MLB games within the DraftKings app for free. DraftKings and MLB also plan to collaborate on future sports betting themed broadcast features that will be a part of the MLB.TV product. So this is great. They're expanding their relationship. You can watch MLB on DraftKings right now, which is great. So at this point, this is a catalyst that, yes, popped the stock up today. Will it be a catalyst that continues to move the stock up? I don't know. It's not groundbreaking, earth-shattering news or anything crazy, so I'm not exactly sure or positive. No one is, of course, but I'm not too convinced, let's put it that way, that this is going to be what takes DraftKings to the moon. Not really, quite honestly. What could be, though, is their next earnings report, which is coming up here in a little bit less than a month, and overall, the technicals are still looking a bit wonky. We have a head and shoulder on the 4-hour chart. We have the left shoulder here, the head, the right shoulder, and we're noticing the right shoulder is playing out right now, and we're in a wedge within the right shoulder. You can see here we're making lower highs and higher lows at the same time, and today, although we did see a pretty solid day, we closed under not only the 180 SMA, but also the 50 SMA on the 4-hour chart. So for me, guys, to be more confident in the trend, and I'm not selling out or anything, I'm still holding on. But for me to see a full breakout in DraftKings, we're going to need to see a breakout of the moving averages, right? A breakout of the wedge resistance, and we need to see the neckline of the head and shoulder break. That is what we need to see. And the neckline is, believe it or not, about $6 away from where we are at about $55 per share. That is right here. You can see based on my arrow. So if we break 55, and I ultimately think it will break 55. DraftKings will break 55, at least in my opinion. That is where we're going to see an extended breakout. And I mentioned this before. If it wasn't for that Hindenburg short report that came out a couple weeks ago, I really think DraftKings would already be over 55. Quite honestly, I really believe that. If you guys recall, that report came out once it hit 55. No joke. DraftKings was on a tear. The report came out, and then boom, it saw a couple bad days in a row, got back to about, I think the report came out this day, and it got back to $44. So it lost 20%. It essentially went in a bear market for a couple of days, and ever since then, it's kind of been consolidating. So we just need to get over 55 from there. I'm thinking 60, 65, no problem, and that's what I'm holding on for. And if it does dip into the mid to lower 40s, I'm adding more to my position, no doubt about it. And we also have the kickoff of earnings season this week. Next week. We have banks, we have JP Morgan reporting, ticker symbol JPM. This is one of the big banks out there, probably the best bank. If you were to force me to buy a bank stock, which, full disclosure, I don't own any, I guess that's not true. I do own bank stocks indirectly via ETFs, which if you guys own an ETF, I guarantee you probably own a bank stock indirectly as well, but directly meaning me owning individual shares of a specific bank stock. I don't own any right now. I used to own Wells Fargo, which was a complete disaster, big mistake. I ended up cutting my losses there. But other than that, I really haven't been a big fan of owning individual bank stocks, but if I had to be forced to buy one, I'm buying JP Morgan all day, every day, and not at these levels. I've been on record saying before, or does that even make sense? I've been on record before saying that I feel like the rally on bank stocks, it's too overextended. I feel like if you weren't in it, it's JP Morgan in specifics, and specifically JP Morgan, if you weren't in it in the 90, 100, 110 level, there's no need to chase it now. But if we're looking at it as a trade, I think there could be more juice in this, especially with earnings coming up here on the 13th, and especially if we break out of the wedge here. So I'm going to put my alert when it comes to JP Morgan at about $158 per share. I want to see if this breaks above the 180 SMA here on the 4-hour. And notice 158 was a resistance in February, into March, into early April as well. So if this breaks, I'm thinking we could rally, especially coupled with good earnings, EPS, revenue guidance, all that good stuff. We'll see how that goes down, and we could maybe fill the gap from 157, 158 up to about 167, which gives it about 5% upside. Goldman Sachs is another one, which if I was forced to buy another bank stock other than JP Morgan, it'd probably be Goldman Sachs or maybe even Bank of America. Wells Fargo's all the way at the bottom of the list. I'm not even sure why I bought that. I was looking at it more as a recovery play. I mean, you guys remember a couple years ago, Wells Fargo had that scandal where they had millions of fake accounts, and a bunch of BS was going on with Wells Fargo. They lost the trust of their customers, and I was looking at it as a value play, maybe bounce back play, and then a year down the line, I'm like, no, this is a bad idea, and I cut my losses, like I said. But anyway, enough with the Wells Fargo trade, and enough with that stuff. Stop thinking about your losses, stop thinking about them. But then again, we all have losses, guys. That's the truth. And Goldman Sachs, GS, we see a clear head and shoulder here. Left shoulder, head, right shoulder. And we notice the neckline is at about 375 to 377 with earnings coming up here on the 13th of July. So 4 days from now. And I'm thinking this could be a trading opportunity if we squeeze out of the neckline, whether it be 375, 380, up to about $390, $395 per share. So I'm going to be watching that. And this also looks like an ascending triangle as well. We notice how we've been uptrending ever since the end of March. Clear resistance at that neckline at 375, 377. So this is a pretty good setup. And we got to break 377 though. So I'm not rushing it until we see that. And if we do see that, keyword is if, we could end up making a trade. So I'm going to put my alert at 377 on Goldman Sachs. 3M is another one that, full disclosure, I used to own as well as a dividend play, and I sold out of that and reinvested it into some growth stocks, like Google, Amazon, and I like 3M, don't get me wrong, but the growth potential there is just not there, quite frankly. Sure, the dividend's great. I believe they're a dividend king, meaning they've grown their dividend for 50 plus years, and the dividend itself is growing quite nicely year over year, meaning they grow the dividend quite nicely, quickly rather. But when it comes to the top line growth, it's just not the best business for me, at least. Sure, you could own it, but but I'd rather be in something like a Google, an Amazon, or something like that, or maybe even Alibaba, which I'm very heavily considering adding a hefty long-term position to in multiple accounts that I have right now. And I've been trading Alibaba, but I didn't add any for a long-term position quite yet, which I'm thinking about doing here. And 3M, I'm looking more at as a trade right now. We're down about $7 from that recent high, down about 4%. 3M also has earnings coming up more towards the end of this month, so about 3 weeks away from today, a little bit less than 3 weeks. And notice how we're trading above the wedge, both moving averages, and quite frankly, we're peaking out of the wedge. So I believe this could be a breakout play. And this chart setup looks very similar to what we saw with Starbucks. We called this breakout a couple of days ago. If you guys recall, it was in a wedge. It was peaking out of the wedge, moving above the moving averages as well. And we broke out from 112 to about 117. I think 3M setting up very similarly there. So we're going to be watching that. Shopify is another one which admittedly, yes, it's ran like crazy, but by the looks of it, it's holding, as of now at least, $14.50. We rallied up today over 20%. Gosh, if Shopify went up 20% in a day, that'd be nuts. I meant 2%. We went up $30 per share, and we closed right under 1,500, which was that all-time high from the beginning towards the middle of February. So the trade here that I'm looking at is, okay, if Shopify breaks 1,500, which I'm going to set my alert for right now, and granted, if the markets sell off on Monday, Tuesday, Wednesday next week, a lot of these big tech names are going to fall as well. But let's just say hypothetically, the breakout we were talking about earlier in the video, like SPY, QQQ, let's say that continues, right? I think Shopify, if it breaks 1,500, boom, mid-1,500s, high 1,500s, where we hit an all-time high 2 days ago. I believe that is where we could be going, meaning there could be anywhere from 5% upside from here to that all-time high. So I'm watching Shopify. Chewy is another one which crushed it today, guys. Absolutely crushed it. Chewy went up over 5%. The ascending triangle we called out played out today. We broke out of the recent highs. In fact, now Chewy, it's at the highest point it's been at ever since the end of April. Wow, or even earlier than that, guys. Geez, middle of April, early April. So Chewy's crushing it. The inverse head and shoulders playing out, and I have my alert at $88. I might as well lower that a bit. Let's see here. Let's put it at maybe 86. If it breaks $86 and breaks 88 as well, I believe there's more juice in the right shoulder here. And where could it get to? Well, I'm thinking $95 to $98, $100 per share, which is where we held support earlier this year in 2021. So I feel like the rally on Chewy's just getting started. The stock was way beaten down a couple months ago. Now we're rebounding quickly, and it's looking good. So we're going to be watching it. And Coinbase is another one which kind of looks like the Chewy chart, not in the past couple of months, but bear with me here, over the past couple of days. Notice how Coinbase here is forming an ascending triangle. It's above the moving averages, and we haven't broken out of the 260 resistance yet, which, going back to Chewy, we did break out of the resistance on Chewy, which in this case was at about $83. We broke out of it. Now we're at $85. I feel like Coinbase could do a very similar, or make a very similar move to the point where we break 260 and we end up rallying. Where do we go from there? Probably, I'd say 280 is the next big target. 280 was support back in the end of April, resistance in the middle of May. So I'm thinking from 260, if that breaks, I'll put my alert right there. Coinbase is going to move up $20, $30 per share, in my personal opinion, over time, of course. So we're going to be watching that. And overall, I mean, that's it for this video, guys. Those are a bunch of stocks: DraftKings, JP Morgan, Goldman Sachs, 3M, Shopify, Chewy, and Coinbase, and they're all looking pretty good. The setups are looking pretty good heading into next week. And it's earnings season. It's getting to the point where it's earnings season. It's going to be a fun July, especially the latter half of July with big tech reporting in the last couple of days of July. So what do you guys think? Drop me a comment. Make sure to smash that like button. Consider subscribing and turning on that notification bell. All of those are free, and they help me out with the YouTube algorithm and so forth. And you guys can check out my Patreon, which isn't free, but I promise you're going to find a lot of value on there. I'm putting so much effort into the Patreon. You get all my buys, sells, call-outs throughout the day, whether it's trades, long-term investments, options moves, which admittedly I haven't been making many options moves lately. And if you're a top-tier patron, you also get a morning update video every single day. So check that out. Link down below, or you guys can go to StockSurfS.com/Patreon. And don't forget to also get your $50 from M1 Finance and your 2 stocks from Webull up to $1,600. All you have to do is deposit $100 in each of those platforms, and you get your free money. It's simple as that. And if you don't like the platforms, take out the $100 you deposited into each of them, and the free stocks, the free 50, it's free money, guys. Literally free money. Link down below. I'll catch you all in the next video. Thanks again for tuning in. Keep crushing the markets. Have a great weekend. Stay safe out there, guys. Peace out.